Good evening, and welcome to After the Bell. It has been a breathless 48 hours for global markets, and as the dust settles on Tuesday's trade, the numbers tell a story of extreme fragility. The S&P/ASX 200 closed up 93.5 points, or 1.09%, to finish at 8,692.60. While it's tempting to call this a recovery, we have to look at the context. We are still nearly 3% below where we started the week. Today was less about buying the dip and more about breathing a sigh of relief as oil prices pulled back from the brink of catastrophe. The primary driver of today's market action was the sudden, violent reversal in crude oil. Brent crude, which touched an intraday high of $119.50 yesterday, is currently trading near $92.60. Why the crash? President Trump told reporters today that Operation Epic Fury is very complete and far ahead of schedule. The market took this as a signal that the hot phase of the conflict is ending. However, we need to look at the data. According to Starboard Maritime Intelligence, AIS data shows that vessel transits through the Strait of Hormuz are still down 92% compared to late February. President Trump says the war is complete, but for the tankers currently sitting at anchor in the Gulf of Oman, the blockade is very much alive. We are seeing a dangerous gap between political signaling and physical supply. Adding to the downward pressure on oil was a coordinated message from the G7 finance ministers. They've indicated that the group stands ready to release emergency oil stocks from the IEA's 1.2 billion barrel reserve. But here is the problem. An SPR release is a temporary band-aid. It doesn't fix a closed waterway. Analysts are now calculating what we call the Trump volatility premium, the extra cost added to every barrel of oil because of the unpredictable nature of U.S. foreign policy. Even with oil back near $90, American consumers are seeing gas prices up 32 cents a gallon in just 1 week. In Australia, we are seeing similar spikes at the pump. This is a direct tax on the global economy caused by the administration's peace-through-power brinkmanship. Briefly looking at individual movers on the ASX today, Santos and Woodside saw selling pressure as the oil price retreated. Commonwealth Bank, CBA, saw a modest gain of 1.39%, largely following the broader index, but investors remain wary of how higher energy costs will impact the RBA's next interest rate decision. Gold remains the only true winner, closing at $5,175 AUD, as the smart money continues to seek a hedge against what could be a very long, very messy de-escalation process. As we head into Wednesday, the question isn't whether the war is complete, but whether the world can trust the current stability. The Trump pivot has given us a temporary reprieve, but with the strait still effectively closed, we are one headline away from $120 oil returning. Watch the G7 statement tonight and the U.S. inventory data tomorrow morning. We'll be here to break it all down. Good night.